Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar saw some relief on Tuesday, stabilising above the 65-cent handle following the heavy decline the previous day, which appears to be more to a flash crash which responded to the base around 63.5. From the rejection, the market has firmed up somewhat and may continue on if we see a break of 65.45. This would give further scope on towards 65.70, 75 and maybe towards a target of 66.5 and reassess from there. Any pullback likely to find support around 64.80. As widely expected, the Reserve Bank of Australia maintained the cash rate at 4.35% for the 7th consecutive meeting. At a press conference, the RBA Governor, Michelle Bullock, noted that while the possibility of raising rates was discussed, the central bank decided to keep rates on hold. She also warned that the interest rate cuts are unlikely for at least 6 months due to the persistent inflation, stating that the markets may be overestimating the time of rate cuts, but still expects them by the end of the year. Eyes now turn to the RBA Governor when she gives a speech in Sydney on Thursday. The euro-dollar saw a modest pullback on Tuesday, while the dollar index, which measures the greenback strength against a basket of 6 major currencies, bounced from 102.70 to 102.90 after the US Federal Reserve officials' comments eased recession concerns. The US central bank policymakers dismissed fears that the weak July jobs data indicates a recession, but warned that interest rate cuts might be needed to prevent one. This week's economic calendar is somewhat light, as the market waits for the next major event, being the Fed Chairman Powell's speech at the Jackson Hole Economic Symposium, scheduled for August 22 to 24. With the topside target reached at 110 figure 10, which was the objective, the market is now looking for a pullback to around 109.20 and the base holding around 108.70, which could draw much demand and therefore see a re-challenge back to that key area of 110 figure 10 and reassess from there. With the downside target in play, traders should closely monitor signals and adjust risk management strategies, as price action may continue to be volatile. The Japanese yen strength eased somewhat as the market rebounded from the 142 objective, and it now looks like we could see a short squeeze in play to 145 2025 or maybe up to 146 and reassess from there. Given the broad aspect of how the market's been performing, we should not rule out another test to the downside at 142 and reassess from there. Sterling somewhat weaker, but still finding demand to the bottom side around 127. And with bullish divergence coming into play here, could see the market snap to the upside and look towards 127.5. And a break there would lead on to 128.10.15 and reassess. Any weakness should continue to find a base around 127.75 to 80. A weaker play for gold as it takes the level of 2,400 out and now looks further to the downside, which could come in around 2,358 to 62. But where this broad uptrend comes in from there, may see a market bounce. In the broader aspect though, we should not rule out the region of 2,500, as I feel this decline may eventually snap back to the upside and see a rally. Wrapping up with oil, the market was a little bit weaker, but expected to find support around this bottom side of $71 a barrel. But overall, I feel with the bullish divergence clearly seen here as the market's declining, and with this weak hammer that's in play, may see a climb through 73.80 and on towards $74 to $75 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoyed a great start to the day.